All right. Good perspective on that IPO. We're going to get into your pro picks now. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. All right, your pro picks are interesting. And in some instances, I would say they're not household names. One is if you're familiar with the REIT space, but let's start with the more under the radar and maybe even the smallest one. Your first pick is BSR REIT, U.S. Sunbelt exposure, but trades up here on the TSX.
Yeah, so it's another one of those names that has U.S. real estate exposure, but trades in Canada, so similar to the IPO we were just talking about. And they're focused on sort of Sunbelt markets, mostly Texas. They have been listed for quite some time, and they're starting to see an inflection in their property fundamentals. So you're seeing their operating fundamentals, occupancy, and cash flow start to grow. But there's a couple of key things that have happened from a valuation perspective that's important. First, they had a complicated structure where there were some Class B shares that could have stopped any transaction from taking place from an M&A perspective. Those have been eliminated. As well, you also saw Avalon Bay, which is a big U.S. REIT, buy 10 of their assets at around IFRS NAV. And they're trading at a 20 to 25% discount to NAV. So this is one of those opportunities. You've got a high quality portfolio, inflection in their operating fundamentals, clean structure, and a transaction that has clearly shown value. This is a name that we like and that we own.
And the market may be not paying attention to any of that.
We don't think they are, right? They're trading at that discount. And it's sort of the same thing that you've seen play out, is that until some sort of catalyst plays out, the public markets will trade these things at a discount for longer than they should.
So trades at around $13 per share. The highest price target is $16.50. Is that around where you are, or you think the value's even higher?
No, I think that's fair. Yeah.
The second pick, the second two are both in kind of the senior and retirement space. And that feels like easy. That's not, that's kind of like, of course, that's kind of like the only part of the market that is held up. Your first one is Chartwell retirement residence. And I shouldn't say that because they really had to come back after the pandemic.
They did. And I'll differentiate them for you.
Please do. Yeah, let's start with Chartwell.
One of them's trading at a premium to NAV and one of them at a large discount. And so Chartwell's trading at a large premium to NAV. It's a name, again, that's been a household name in the Canadian REIT space for some time, but they've done a really good job of cleaning up their portfolio. So they used to have some exposure to long-term care. Now they're purely private pay, independent living, and assisted living. Vlad, the CEO, has spearheaded that transaction, that kind of transformation. And this kind of has coincided with supply falling off a cliff in retirement and demographics continuing to go the right way for them. That has resulted in occupancy rising, which we still think it has a way to go, and as well as very, very strong cash flow growth. We're expecting 15% out of the name for 2026. That compares very favorably with its peers and probably why it's trading at a slight premium.
Is it only slight? Because I was going to ask, what's the upside?
Well, I mean, the upside could be very dramatic. It's an M&A candidate. And if you look at its U.S. peers, some of its closest U.S. peers are trading at 100% premium to NAV.
Wow.
Yeah. So if you look at names like Welltower in the U.S., they're trading at large premiums to NAV. So it actually doesn't look that bad for a 15% cash flow grower going into the future.
So you think that somebody could come in and scoop up Chartwell?
It's a widely held shareholder base. The valuation is attractive. The assets are very well managed and attractive as well. It certainly would be at the top of our list in terms of M&A candidates for people looking to grow in retirement.
At that kind of premium?
I think it's if you have a strong growth profile, you're willing to pay a premium.
Is there a U.S. buyer, you think, or it could be a Canadian one too?
I think there could be pension plans. There could be a U.S. REIT. That's why we like the name. We think there's multiple avenues towards driving shareholder growth, and only one of them is M&A.
Brookdale is your third pick. Again, seniors, but trades in the U.S. What is the opportunity? This one you say is trading at a discount, even though it's perked up a little bit in 2025.
It has perked up. So I will tell viewers, this is more of sort of a levered way to play seniors housing. This stock, conservatively could be up $2 to $3 from where it is today. If you get a little bit more aggressive and their occupancy really starts to pick up, we start seeing a stock that could be, in the mid-teens. So we like it because we believe that the operating fundamentals have really inflected. They've got a high quality portfolio all across the US, and they're seeing the same trends that you're seeing in Canada. Demographic tailwinds, very, very little supply coming online, and that's all flowing into Brookdale. And there has been activism around it that's kind of dissipated.
Because Brookdale won against the activist.
Brookdale won, yes, but even in periods of times where activists sort of don't necessarily win, I think the management team and the board is still on notice that they've got to create value. You can't continue to trade at a perpetual discount to NAV forever. And if you're in an asset class where your peers are doing much better than you are, then you've got to really step up. And we think Brookdale will, and we own it.
So all three of these, BSR, Chartwell, and Brookdale, they have an M&A twist. And you just think, you think, I guess that aligns with your thesis that like it's on. And we're seeing it in every single industry. M&A is at a record. Yeah. So we're going to hit new records in 2025 for the amount of deal activity. And it sounds like you're saying REITs are going to be a big part of that.
I think that they will be. And part of it is our investment strategy, and part of it is sort of we think it's the right time. And with macro stabilizing, again, while there weren't interest rate drops today, we think the fact that inflation has come down and interest rates are stabilizing and valuations are stabilizing in real estate, that's what's going to push M&A forward. And you're going to start to see buyers become more confident, and that's going to play out, not necessarily next month, but over the next 2 years.
Michael, fascinating conversation. Thank you so much for joining me.